Hey, good morning, guys. Welcome to Market Mondays. Today we're going to be talking about what's expected about this week, even though things have been relatively steady for the last 2 weeks. So, before I get right into it, I'm going to do a quick dad joke. Quick dad joke today is what happens when you slap someone at a high frequency? When you slap somebody at a high frequency, it megahertz. Megahertz. Pew pew. All right, so getting right into it. Last couple weeks, let's say the last 2 weeks, when it comes to rates, they've been kind of nice and steady, which has been nice. They're on the nice and steady on the high end, and we do expect them potentially. Well, we hope that they still continue to get better. Now, the big news this upcoming week is what's going to happen on Wednesday. This Wednesday is the first inflation report that comes out for the month of May. And then the next day is the second inflation report that comes out for the month of May. So again, there's three of them that come out every month, but they have a huge influence on how rates will go. So as soon as the report comes out, rates are going to change, probably going to change immediately as soon as that report comes out, because it determines how the economy is doing within regards to inflation. And there's three types of inflation that are being measured. The one that comes out this Wednesday is CPI. And then the one that comes out the day after is PPI, which is CPI stands for Consumer Price Index. PPI stands for Producer Price Index. So this week's going to have those 2 days, Wednesday and Thursdays, are going to have a huge influence in regards to what rates are, how rates are going to trend for this month of May and pretty much throughout the rest of the week. So we'll see how that goes. There is a forecast for it to show slightly higher. For inflation to go slightly higher, but we're at a point where it's really hard to have that significant drop down. So they are expecting for it to rise higher. Now, if that's the case, you would think that rates are going to get worse. Well, it actually depends on how the report comes in. If it comes in as expected or lower than what's expected, then rates are probably going to respond favorably. Now, if it responds higher than what is expected, that's where we'll see probably rates go in the opposite direction what we like. So it really depends on if it comes in higher or lower than what's expected. Okay, what's expected, that it's still going to go up higher. It just depends on if it's going to go higher than that or lower than that. So that's the main thing when it comes to those two pieces. So we'll basically have an idea of what's going to happen on Wednesday and Thursday. So just to give you guys a quick scope on how those rates look. If we filter out from 30 for all the 30 years, pretty much they've been steady in the high sixes and low sevens. For all 30-year, pretty much all the 30-year normal loans. And you kind of see how even the conventional rates have pretty much kind of plateaued. All the other rates slightly went up, but not by much. We're at a very pivotal point in the charts right now where they're getting squeezed between a really, really important support level and a really weak upper support level, or ceiling, I should say. So we hope that rates will get better and go past that ceiling and get better. So it's kind of weird the way I said that, but there's also a reason for that. So, but yeah, we hope that this Wednesday and Thursday that we'll start seeing more favorable things from the inflation reports that will impact rates in the direction that we want. Again, there's still that talk about what's going to happen in June, that we may see a lot of improvements in June as long as nothing else changes. So we'll see. But that's what we're kind of hoping on right now. Otherwise, that's about all I got for you guys today. Hopefully you guys have a good week, and I will talk to you guys too.